Good morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about the retirement contribution limit changes for 2022. With inflation on the rise, the IRS increased the 2022 contribution limits for some retirement accounts. Although a 2021 congressional report found that only about 8.5% of defined benefit plan participants and 4.7% of individual retirement account IRA holders max out their contributions each year. Increasing the amount you put aside for retirement may help your financial independence. Here is what retirement savers need to know about the increases allowed in 2022. Number one, changes to 401k limits. For 2022, the 401k limit for taxpayers under age 50 has increased by $1,000 to $20,500. Those age 50 and older may make another $6,500 catch-up contribution for a total maximum contribution of $27,000. This contribution amount is individual, which means that a married couple may contribute a total of $41,000 to their 401ks, plus $6,500 more for each person who is age 50 or older, for a maximum of $54,000. Along with 401ks, this $20,500 contribution limit also applies to 403bs, 457, and thrift savings plans available to government employees. The other thing to know is no changes to IRA limits. Though 401k limits increased, the IRS did not increase the contribution limits for traditional IRAs and Roth IRAs. These IRA limits remain the same, $6,000 for those age 50 and under, and $7,000 for 50 and older. The deductibility of the traditional IRA contributions depends on your household income, while your ability to contribute to a Roth IRA also depends on your income. And unlike the IRA contribution limits, these income thresholds have changed for 2022. For single taxpayers covered by a 401k, 457, or another workplace retirement plan, a deduction of up to $6,000 or $7,000 limit for age 50 and older is available only if your 2022 income is under $68,000. Those earning between $68,000 and $78,000 may deduct a portion of their full IRA contribution. Those income thresholds represent a $2,000 increase from 2021. For married taxpayers filing jointly who are both covered under a workplace retirement plan, the full IRA deduction is based on the total household income under $109,000. Those earning between $109,000 and $129,000 may deduct a portion of the full IRA contribution, while those earning more than $129,000 cannot deduct any traditional IRA contributions. For married taxpayers filing jointly where a workplace retirement plan covers only one of the spouses, both taxpayers may deduct the full IRA contribution if they earn less than $204,000. In 2022, with a phase-out allowing a partial deduction for earnings between $204,000 and $214,000. IRA contributors whose income exceeds these limits may still contribute to a traditional IRA, they just cannot deduct this contribution. But when it comes to a Roth IRA, those whose income exceeds the contribution thresholds are barred from directly contributing to a Roth. For single taxpayers or heads of household, the full Roth IRA contribution is available so as long as your 2022 income is under $129,000. For married couples who file jointly, the Roth IRA income threshold starts at $204,000. Those who exceed the $214,000 cannot contribute any amount to their Roth. Married taxpayers whose household income is between $204,000 and $214,000 may contribute a lower amount to a Roth IRA. Because overcontribution to an IRA or Roth IRA carries some financial penalties, work with a financial professional to not exceed the maximum allowed. It is important to know these limits and how they increase for the 2022 tax year. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.